Dow's gone up really. If you look at it, it is the strongest right now of the three. We've seen it go from earlier in the year around 450 to about 530. It's pulled back a little bit, but not that much. And then if you look at what's going on with today's price action behind me here, you can see that we are back up to and very close to those all-time highs. The other thing that's happening is we've seen a complete reversal just since last week, where at the money implied volatility, this is what option traders look at to help them get a gauge on what the overall market is doing. Range bound is hitting lows for the year, right? This is actually good for the stock market, but when you get too low, when we limbo too low, that becomes a problem. And there's some cracks beginning to appear, right? And I'll show you those in just a moment. But that's DIA. Take a look at SPY, and you can see the S&P made its yearly highs back in June, and it's been bobbing back and forth, and it's really made almost what looks to be a triple top, right? And we seem to be around the 760 area. Looks like the 760 area for the S&P. And again, if you take a look at today, we're very close to all-time highs once again. But the reason I say the Dow is stronger is because it's just coming off its highs. It's not attempted again and again and again to crush those all-time highs. Finally, look at the Qs. So this was the AI and tech-driven move that happened from April up until June. Biggest of the three, but also we've had the biggest pullback as we've seen the Qs go from just below 750 down to just above 650 before reversing course. So I believe AI and tech are going to lag the next move higher, and we'll see new all-time highs in the Dow and the S&P before we see them in the QQQ. Now, looking out past these three, what does seasonality look like? Well, it's still bullish, all right? It's a little bit more bearish for the popular stocks, but when you look at the overall markets, it's still bullish. We start the week out 56 and 44 in favor of the bulls. We end the week 77-23 in favor of the bulls. But I want you to look at the most powerful trends that are starting to come up as we hit the first week of August. The most powerful trends that I see right now are in FXY and in UUP. Hey traders, Tom here, and if you've been keeping score, I just completed my 2-week cash camp, which you all had access to. So let's do a quick recap. In week number 1, I covered the foundation of rules-based pattern trading, from finding the right stocks to understanding why successful traders rely on evidence instead of opinions. Now, this included my stock cycle trader debrief, as well as videos like why I ignore 99% of the markets, how to become a pattern trader, and how patterns beat predictions. In week 2, I sent you another weekly stock debrief and videos including finding the best trades, why I trade options, cutting your risk without upside, and finally, how to place those orders. Now, if you missed any of this, check your inbox because it's all been sent to you in recaps. But the biggest thing you may have missed is the invite that I sent you to become a Money Counter Pro Plus member. Pro Plus members get access to my daily Money Counter software scans, as well as weekly hand-picked trades, weekly video updates, real-time trade alerts, and much, much more. And today, you can get it at a special cash camp price, right? Just click on the QR code on the screen or the link in the description below for all the details. Now, first, what is FXY? This is the ETF that looks at the Japanese yen and the US dollar. This, I know it's green, but it's bearish, okay? It's bearish. The green that you see on the screen is every time FXY went down. If you shorted it, you see that it has dropped in value anywhere from, very, very little in 2020. It had very little movement in 2020, had the biggest move in 2022. And remember in 2022, remember what happened? We had the beginnings of the move down, the bear market. Well, the Japanese yen moved lower against the US dollar by over 11%. Last year it was 3.9%. But in 10 of the last 10 years, we have seen the Japanese yen start to pull back a little bit. Now, here's the second one I want to show you, the double dollar index. This is UUP. This one you're probably a little more familiar with if you look at currencies. UUP is the double dollar index. It measures the US dollar to about a half a dozen other currencies around the world. And it also does this via what's called the USDX futures. Here's the thing you want to know about the US dollar. When it goes higher, right, it's going higher against what? Foreign currencies that also could hit assets and even the stock market. And you can see here for the next 2 months, heading in August and September, we typically see the US dollar, at least the last decade, we've seen it tend to move higher from as little as 0.25% in 2019 to as high as almost 7.5% in 2022. But you can see every year this moves a little bit higher. Now, the double dollar index moves at twice the rate of the speed of the actual US dollar. But if we have an average move here, and let's call that average move on UUP of 3%, that means that the US dollar will move up about 1.5%, right? It doesn't sound like much, folks, but let me tell you something. The US dollar, the UUP, is already up, I want to say 10% for the year. That means that cash has already increased 5% on this year. And, what is it affecting? It's definitely affected gold, definitely affected Bitcoin. And I believe it's eventually going to knock on the doors of the stock market. So August tends to break seasonality in favor of the bears, okay? This is going to put pressure on assets like gold. It's going to put pressure on assets like Bitcoin, right? And ultimately, I believe it could put pressure on the stock market, okay? And FXY and UUP, those patterns confirm this.